Yeah. All right, let's talk Newmarket and specifically looking at our freeholds in Newmarket. Newmarket had been doing so good. We'd been seeing them post some decent numbers, and again, all relative in comparison to the rest of the market. And then last month, we saw a big change in our month over month change of median price and a decline of 8.5%. Matt, that's a staggering number to me when I'm looking at freeholds here in Newmarket.
Yeah, it's a big decrease. I think it's because we went from 55 sales to 72, so there's a little bit more data. I think the bigger number for me will be year over year at the 9.3 because it was 77 sales versus 72 sales. So it's a bit more averaged out number there. So a 9.3 decrease. It's the
Yeah.
30, we've had a 30.9% increase in transactions, which in an average market, you'd be like, holy crap, like that's unbelievable momentum. But then you see a 30.8% increase in new listings.
Yeah.
And it basically just washes it right out to a degree.
Again, and the relativity of like, okay, let's compare this May to what last May would be. We're not talking pricing, just what would typically sell in a month of May in the market, and we're still down 6.5% in comparison to what we were doing last year. So
Yeah.
I think that is one of the challenges. And like you said, looking year over year, down 9%. Our transaction volume, we haven't talked about this too much on the other slides, but it is important to note, like our year to date change 2025 is down 33% in comparison to the same time frame
Yeah.
last year when looking
That's
at
huge.
freehold sales in Newmarket. So there's just not as much activity, not as much buyers out there looking. Now, what is interesting is we did see a lot of buyers enter the market in comparison last month. We had a nice month over month change with increased sales volume. And what that helped do was bring down the average days on market, or sorry, median days on market. We brought that down from 20 to 15 in a month over month basis. Comparison to the previous year was at 12, but still not bad. I think that's a good change, but that just shows that people were entering and buying, but they were buying at some good prices.
Yeah.
Okay, right in the mix of where we would expect new listing volume to be. Like you said, it's not the amount of new listings hitting the market that are the real challenge the market's facing. It's more so when we come into and we see that sales aren't moving, we're seeing these active listings continue to stack on top of each other. Now, unlike the condo market, we're not the highest we've ever been. We have had previous years that were higher, specifically like our 2018s, 2019s, a little bit of 2017 there. So yeah, kind of that stretch as we look through our fixed rates, like our bond market, looking at the other times that it was high, boom, right there, our 2017 to 2019 stretch. This is where it equates, and Newmarket is feeling that effect. And here we are in terms of our sales volume. So at least it has been trending up through the spring a little bit, but we are the lowest we've been in those last 15 years.
Yeah.
Median price, we are still above 2021. That is going to, I think, I got to imagine that we see a little uptick here in the month of June. I don't know if we'll cross over 2021. Matt, what are your thoughts there? We didn't get the rate cut for the start of June. Do you think we've got enough momentum to turn this thing around and stay above 2021, or do you think the freeholds in Newmarket are going to cross underneath?
They're going to cross underneath.
Yeah,
And I'm wondering in my head how close we're going to get to 2020 by the end of the year.
yeah,
Because we weren't far off 2020 in 2023 and 2000, what was the gray one? 2022,
yeah,
which is incredible to think right now. But we were seeing an acceleration to the upside in 2020, so that's why it's on the higher end there. But I mean, you just look at the trajectory of that line, and going into a potentially slower market, unless there's drastic changes to tariffs and some more spending in the economy and some interest rate cuts. We could very well end up above the red line and somewhere maybe close to where we were at the end of
yeah.
2022.
Yeah. I think if buyers are looking at the recent sales that happened this month and they're using those sales as their comparables for what they think value is going to be, it just makes sense that we're not going to be able to get this to turn around quick enough to stay above the 2021 numbers.
Yeah, the
But
only the only acceleration we see in this chart was at the end of 2020 and the end of 2021 when interest rates were below 2%.
yeah.
for variable or for fixed or close to it.
Yeah.
We're not there right now, so it's hard to see an acceleration to the upside unless there's some drastic change.
Yeah. Now, our months of inventory did did face a better rollover here in terms because we saw those transactions uptick a lot last month. So it has come down a little bit. It's just 4.5 months worth of inventory. So much more balanced, leaning towards buyers than some of the other ones that we saw. Obviously, the condo market being up there almost at 9 months for York Region, but still high, still high. You can see how it tracks. We're above the 2018 numbers. And for those of you that were selling real estate in 2018, you remember how slow some of that was, how much inventory, how hard you worked to get some of those units to move. And that's kind of where we're hovering right now. So we're not out of the woods there yet. And like you said, I think when we look at this, that's one of the other indicators why we think this price will come under the 2021 numbers for the month of June. But I look forward to being wrong. I'd love to see that rebound.
Yeah.